In this Bitcoin video, we're going to be talking here about the Rainbow Wave Indicator. We're going to be talking about the Bitcoin Sharpe ratio, and we have another extra Bitcoin indicator right over here at the end of the video. And we're also going to be talking about the US national debt and what this is going to mean for Bitcoin. So first, let's dive here into the first chart. So what we can see right over here, that this is the Rainbow Wave Indicator. And this basically shows you that Bitcoin always trades within these bands right over here. So you can see that Bitcoin tends to follow this very beautiful wave over and over again. Now, what we can see here is that for the previous cycle, we had a target here of around 200,000 US dollar. We did not hit that. And the reason for this is, as well, we have talked about this in many of my videos, is because of AI. A lot of money that should have actually gone into Bitcoin went into AI instead, especially because AI gained so much value. A lot of speculators and especially a lot of retailers started to investing in AI instead of Bitcoin. That's one of the reasons why we did not have this massive move to the upside. But also something a lot of people haven't really talked about a lot is that miners pivoted to AI. And if you go here right over here and open this indicator, the hash ribbons indicator, what you can see is that basically we've seen a massive decrease here in the hash rate. And that's because a lot of miners have pivoted away from investing into Bitcoin, from mining Bitcoin, and they've started to use their computer hardware for mining and operating AI networks. So what we have seen is because of that, a lot of miners have probably sold their Bitcoins, probably pivoted away. They probably didn't see any reason to keep holding Bitcoin. And that's one of the reasons why the market did not move to these higher levels that we were actually expecting. But what we can see is that when we're still in the bear market, we are trading still within those bands. And we have currently a target right over here around 55,000 US dollar, which means we still have a little bit further to go here to the downside. Now, the interesting thing about this indicator that is probably much more powerful than just the bands itself are these lines right over here. And what they show right over here are different times on when historically Bitcoin has bottomed and topped out. So what we can see here, that every single Bitcoin cycle, Bitcoin would actually bottom out on the exact same time frame. And each and every bottom would be exactly 4 years apart, as you can see right over here, exactly 4 years apart. So what we can see is that after this green line, we generally find our Bitcoin bear market bottom. We saw it right over here in this cycle. We saw it here in this cycle, and we saw it also all the way back right over here in 2015. And the same actually happens right over here for the all-time high. So they often happen around this red line. So it happened over here and exactly right over here at the top. And then here, this cycle as well, it happened here on the top. And then the last cycle, it also happened here exactly at the top. And again, this indicator has been out for a long time. So nobody really just put this red line over here. It's just calculations based on where those previous cycles also top out. So again, we still have our green line right over here setting all around October here of this year, which still means we have a little bit to go. And we could expect here that the Bitcoin price is going to bounce here from the bottom of this channel, go sideways, and eventually start its uptrend here later next year. Again, this cycle was really disappointing because, again, a lot of miners pivoted away from AI. A lot of retail investors invested into AI instead of Bitcoin. And that's just one of the reasons why we just did not go to this high level. But we can still expect that the Bitcoin price is still going to bottom on this exact level. And if it does, and we eventually start moving here to the upside, we can still hit our target here of about $500,000 US dollar. Now, this sounds absurd. How can we go from having a crappy cycle to going to $500,000? Well, first of all, it is very likely that the AI bubble somehow in the next few years will probably deflate. Now, this would cause probably a liquidity crisis in Bitcoin to sharply correct here, maybe for a few months, but we would likely see that the Federal Reserve will come in and start printing money. Now, you will likely see some kind of a rotation going from AI into Bitcoin. Now, the reason why this actually happens, and we're not going to go into the full details, but it is because the US national debt continues to increase and to increase. And the US government is currently running a 1.6 billion US dollar deficit. If there's going to be any type of economic crisis, that means that this deficit would absolutely spiral out of control. Because imagine this, if there's a crisis and the stock market crashes and a lot of companies go bankrupt and a lot of people stop spending money, then a lot of companies will stop paying taxes, of course, because they're bankrupt. But if the stock market also cracks to the downside, a lot of the profit taxes that people tend to pay on these type of stocks when they sell would also significantly decline. Because if the stock market has a significant correction to the downside, a lot of people just don't have any profits anymore on their stocks. And so if they sell them, they don't pay a tax on it. So keeping stock markets high, keeping the economy high, keeping companies from going bankrupt is important to keep this deficit under control. And so that's one of the reasons that if the AI bubble will eventually collapse, what you will likely see is the government coming in and massively start spending money, what we also call printing of money, money printer go brr, to keep the economy alive. Now, if that's going to happen, you probably would see some kind of a rotation away from AI into safe havens like Bitcoin. And this could potentially push us here to these much higher levels, for example, $500,000 US dollar. Now, again, this cycle was just a little bit unlucky. We just had, AI was just very powerful. A lot of people were hyped about AI and people just kind of lost and forgot about Bitcoin, which is completely fine. But don't forget about Bitcoin right around here, around this bottom. Again, we are currently trading around this green line. Last time that we were around this green line, we already were at the bottom. So if this thing is going to bottom out, even if we go slightly outside of this chart, it could happen, whatever. Maybe this chart, even if it's even slightly wrong and we go slightly out of it, let's say $50,000 US, regardless of that, guys, this US deficit clock does not change, and we cannot get any crisis because otherwise the deficit will spiral out of control. So talking here about the next chart, this is the Sharpe ratio, and this is basically an indicator right over here that I found. This is from Astrovision. He has a lot of different types of indicators, and the Sharpe ratio basically shows you is when it makes sense to invest in Bitcoin, when the risk compared to the volatility is actually quite preferable, or for example, maybe not preferable. So for example, if you have massive volatility to the upside, but a lot of the volatility has been really quite recent and it's kind of unexpected, then the Sharpe ratio goes up and basically says, okay, buying here compared to the actual volatility is really not a good thing. You see this especially a lot, for example, if the market continues to move and move and move further to the upside, and you're looking at, for example, a chart like this where the price just goes sideways and then the chart is extremely high, you can say, okay, buying here maybe seem like a good idea because you look at the chart and you're like, hey, the chart will keep going to the upside. But the Sharpe ratio would actually say that, hey, because the price has already exploded, because the volatility has exploded, it's much more likely that it will get some kind of a correction instead of just going and moving further to the upside. It is kind of showing you where the risk is. It's not necessarily a bottom or a top indicator, but it basically shows you like, hey, buying here is risky compared to the actual volatility. It makes more sense to, for example, look for a stock that is lower on the Sharpe ratio. And that's kind of how it works. So with this rolling Sharpe ratio, I've kind of slightly adjusted here the settings, as you can see right over here. If you open this indicator and just put in these exact settings as well right over here, what you can see is that we are currently hitting a green area. Now, every single time that we hit this green area, we always saw the Bitcoin price bottoming. And now what this indicator as well shows you is that right over here at the top and right over here throughout the cycle, this was basically a warning like, hey, the Bitcoin price is overpriced. Buying here is just not going to be a nice risk to reward. And to be honest, the Sharpe ratio in this way was completely right, because what you can see here is that, for example, in this cycle right over here, when the Sharpe ratio started flashing red, it was basically like, hey, buying Bitcoin here doesn't really make sense. It made sense because even though we did go up quite a bit and we doubled in valuation, we crashed below that exact level during the bear market. And we can see the same thing happening again right over here. The Sharpe ratio was basically saying throughout this whole rally, hey, look at this, buying Bitcoin here is just not going to be that good. The risk to reward is not going to be there. And even though that we did move further to the upside, we are currently trading at the exact same level as we were trading right over here. And so the Sharpe ratio is basically saying, hey, buy around these green areas. Maybe you don't necessarily have to exactly buy the exact bottom, but these green areas just show you when historically buying Bitcoin would have been very, very nice. Again, relatively risk-free compared to, for example, buying at these red areas. So again, a lot of people, they tend to complain and they tend to cry when Bitcoin goes to the downside, but actually those are the opportunities to buy. Instead of complaining about this, look at where we are right now. If you have cash to the side, buying Bitcoin now is an amazing opportunity. And people think that money is made during bull markets, but I always say money is made during bear markets, because during bear markets, that's where you get the opportunity to buy. Now, I understand if you went all into Bitcoin here at the top, it's, what I'm saying here probably you wouldn't probably very much like it, because if you already went all in, you don't have really any cash to take part of this opportunity. But that's why these type of indicators work. When the Sharpe ratio, again, is high, the risk compared to the volatility just really isn't there. It's much better just to wait, for example, buy in these green areas or just DCA over time. But again, we're now hitting a green area. So historically, around this green area, that's generally when buying Bitcoin would have been extremely useful. So this could be, again, an indication like, hey, you may want to pay attention to where we are trading right now. And this, again, also coincides here beautifully with the Bitcoin rainbow wave over here as well. Now, I understand I'm not a financial advisor, so I could be wrong, but this is just my opinion, how I currently see the chart. Now, the last chart I want to talk about right over here is, this is called the Bitcoin vaulted price decay. And what it does, it makes these bands right over here, and it uses long-term holding data to come up with these top bands and these lower bands. And it kind of measures on these long-term holders if they move coins or don't move coins. I'm not going to go fully into all the calculations, but what we can see right now is that these bands are currently having a prediction around 40,000 US dollar. Now the thing is, guys, is we are currently down only here about 50%. But what you have to understand is that this cycle, for example, we went down all the way about 76%. This cycle, we went down here about 84%. So being down 50% is relatively minor. And if we go all the way to this line over here, we would be down 67%. Again, that is perfectly in line with what we have seen during those previous bear markets. And that is something that I want you guys to really understand. Yes, we could potentially go and bottom here, but something that you have to keep in mind, absolutely have to keep in mind, is that crashing to 67,000 US dollar would not mean Bitcoin is dead, would not mean that we cannot have another Bitcoin cycle, because historically that's exactly what Bitcoin would have done. Crashing 80% to the downside, crashing 70%. So 67% is well within the norm of doing that. And that is something that I, will probably give you guys as advice, is understand that Bitcoin can have these very strong pullbacks to the downside. It can go sideways for a couple months, maybe even a year, and then still go to some of these higher levels. That is historically what Bitcoin has done. It doesn't mean you should go all in and just expect that Bitcoin will pump up, or that there's 100% certainly it will pump up. But what I'm saying is that Bitcoin dumping here further to the downside, or right now crashing, or tomorrow crashing to 50K, is not the end of Bitcoin. And I know a lot of people in X would probably say Bitcoin is dead, or people will compare Bitcoin to AI stocks or things like that. But realistically, Bitcoin will always outperform stock markets. It has always outperformed stock markets. It still went up here from 17,000 to 120,000. It can go from 50,000 still to $500,000 US dollar. It's historically what Bitcoin has done, and especially if this debt continues to grow, I mean, the door is the door is wide open for Bitcoin to set a new all-time high and go to much higher levels. So don't be too distracted from these type of things, and just understand what Bitcoin has historically done, and just chill about this. This is Bitcoin. This is what Bitcoin does. And if you don't like it, sell your Bitcoin. But to me, this looks all completely fine. But it is something to keep an eye on here on this indicator as well, is 40,000 US dollar. If we hit that, then this indicator will basically tell us like, hey, that's where Bitcoin is probably going to bottom out. And from that point onward, again, using here this green line over here around October of this year, if we hit that around October of this year, then that may as well be the bottom. So that is going to be the video of today. I hope you guys enjoyed this video. Make sure to like and subscribe. Hope to see you guys here in my next video. Bye bye.